What if I told you that the entire traditional Western economy is essentially a giant deflating bubble? Welcome to this explainer. Today we're diving deep into an incredibly urgent financial thesis from Peter Schiff's The Little Book of Bull Moves. We're going to skip the dry theory and zero in on highly practical trading and investing methods. Specifically, we want to look at how you can actually capitalize on this massive global paradigm shift that is being driven by the explosive growth of the Indian market. So if you want to know exactly where the real wealth is moving right now, you are definitely in the right place. Let's get into it.
To really wrap our heads around this shift, we have to start with a pretty stark reality from the source material. If you listen closely, you can almost hear the hissing of a bubble deflating, one that comprises the entire US economy. That's intense, right? Schiff's thesis is that this isn't just some temporary dip we can wait out. He argues the consumer-driven Western economy is structurally compromised by debt and inflation. It completely flips the conventional financial wisdom we hear every single day. And frankly, it forces us to rethink exactly where we're putting our money if we want to survive and actually thrive in the coming years.
And that brings us to the very first trap you absolutely have to avoid. There's this huge, fundamental conflict of interest between Wall Street's agenda and your reality as an everyday investor. Look, Wall Street firms, the investment banks, the mutual funds, the active managers, they're mostly just in the business of selling stocks and raking in fees. They're totally trapped in this short-term quarterly gains horse race. But for you and me, our reality requires patience, discipline, and absolute long-term performance. You simply can't afford to get chewed up in their short-term churn. You need a rock-solid strategy built for a fundamentally changing world. Section 1. The Disruption. India and the Global Engine.
2.4 billion. That is the combined population of India and China right now. The sheer scale of that number is just staggering. These nations are coming into immense newfound wealth, and as that purchasing power is unleashed, it is driving the global demand for commodities to absolute stratospheric levels. The Indian market specifically is undergoing this rapid, massive wave of industrialization. They aren't just casually participating in the global economy anymore, they are quite literally becoming the foundational engine of it.
So the real key here is understanding how their demand is so completely different from what we're used to seeing in the West. In the US, our economy is industrially mature. Our durable goods market is pretty much just replacement-oriented. You know, we buy the newest cell phone, a thinner TV, slightly lighter gadgets. But emerging markets like India, they are going through massive resource-intensive industrialization and expansion. They aren't just upgrading gadgets. They're building power grids, entirely new cities, massive bridges, and raw infrastructure from the ground up. To put that into perspective, that requires an unbelievable, almost unfathomable amount of physical stuff.
Section 2. The Commodity Twofer.
Now we get to a really cool concept from the book that serves as the perfect blend of defense and offense for your portfolio. It's called the Commodity Twofer. Basically, it's an investment that pulls double duty. First off, it acts as a time-honored hedge against inflation and a steadily declining dollar. But second, it puts you right in the sweet spot of a super bull market driven by that insane global demand from India and China we were just talking about. So you're protecting your purchasing power while simultaneously surfing a massive wave of global growth.
So where exactly is all that explosive emerging market demand going to actually go? Well, this breakdown of the Reuters/Jefferies CRB index gives us the roadmap. We are talking about energy, like crude oil to fuel thousands of new factories, precious metals, grains and oilseeds to feed literally billions of new middle-class citizens, and industrials, think copper for wiring entire nations, and cotton for textiles. These are the basic, tangible, absolutely crucial materials that an industrializing nation like India simply cannot expand without. They have to buy it.
Section 3. Practical Methods and Pitfalls.
Okay, before we get into exactly what you should do, we need to have some real talk about what you definitely should not do, unless you're a hardcore, experienced professional. The source material doesn't sugarcoat this at all. Commodity futures trading is analogous to playing a bull stock market by day trading. Look, futures contracts are incredibly complex, highly leveraged, and wildly risky for the average investor. Sure, seasoned pros can make an absolute fortune, but one wrong move and you are wiped out. We are looking for highly practical investment strategies here, not a spin at the casino roulette wheel.
So, if we're avoiding futures, what are the actual realistic ways everyday investors can capitalize on this massive paradigm shift? Well, you've got a few solid options. You have commodity index exchange-traded funds, or ETFs. You also have exchange-traded notes, or ETNs. Then there are high-yield foreign stocks, which is a fantastic strategy we'll break down in just a second. And lastly, if you prefer to have a pro take the wheel, you can look into managed accounts with a broker advisor who actually specializes in these very specific global macro trends.
But wait, I need to throw out a massive caution sign regarding ETNs. On the surface, ETS and ETNs might look like exactly the same thing because they both track indexes. But under the hood, they are fundamentally different beasts. An ETF actually holds a portfolio of assets, and it's usually fully collateralized using short-term treasuries. ETNs, however, hold no underlying portfolio at all. They are literally just senior unsecured debt instruments issued by a bank. That means you are taking on credit risk. If the bank issuing that note goes under, you can lose your entire investment, no matter how great the actual commodity market is doing. Honestly, if you're going the index route, sticking to collateralized ETFs is the much safer play.
Section 4. The Foreign Equity Strategy.
All right, we have arrived at perhaps the most practical, actionable takeaway of this entire explainer when it comes to playing the Indian market boom. The real secret? It actually isn't trying to pick some highly volatile domestic stock located directly inside India. Nope. The smarter play is buying a combination of value and high dividends in established, developed foreign economies that just happen to be incredibly resource-rich. Think about stable nations like Australia, for example. They act as massive global exporters, directly feeding that ravenous infrastructural appetite in India. By doing this, you get the stability and transparency of a developed market while effectively riding the coattails of India's explosive, unstoppable growth.
And here is the exact tactical, top-down playbook to pull that strategy off. Step 1, select your region. You want to hunt down those resource-rich, developed nations that have strong currencies relative to the US dollar. Step 2, identify the producing companies inside those borders. We're looking for the major miners, the energy providers, the agricultural giants, or even local utility and commercial real estate companies that are booming because of all that export cash. Finally, Step 3, conduct your traditional security analysis on those specific companies to make sure you're getting good value and reliable dividends. It is a highly structured, super logical way to capture global growth without taking on unnecessary blind risk.
Section 5. The Global Wealth Transfer.
As we wrap things up, the source text lays out this incredibly stark reality, comparing the Western world to the emerging East. We overconsume and we underinvest. They underconsume and overinvest. They help us keep our standard of living. But guys, that old dynamic is actively falling apart. Purchasing power, industrial might, and ultimately the very standard of living are steadily transferring away from mature, debt-burdened economies right into the hands of these emerging economic giants. The middle class in India is exploding right now, and they are aggressively demanding the physical resources required to fuel their ascent.
Which leaves us with one final, absolutely critical thought to ponder today. As this historic, epical wealth transfer continues to unfold, and as the global standard of living fundamentally shifts from west to east, take a hard look at your own strategy. You really have to ask yourself, is your portfolio just positioned defensively, hoping to survive a deflating bubble, or is it actively, intelligently positioned for the massive emerging bull market? The global engine is running right now. It's entirely up to you to decide how you're going to ride it. Thanks so much for joining me on this explainer. I really hope this helps you navigate all the exciting shifts we have ahead.